Today is Thursday, August 22nd. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Kevin Merko and Jason Fernandez are joining us on today's show, but first, let's see where the markets stand. The cryptocurrency index CCI 30 has slipped to settle north of the 3,300 point level. The index has declined by 12% so far this month, but it remains up by more than 50% year to date. The 30-day Bitcoin volatility index has stabilized at slightly more than 3%. The index has been trending south during the past month. Now, trading activity increased during the past 24 hours, and the CoinMarketCap website's daily trader volume indicator ventured north of the $60 billion mark. The Messari website's real-time volume stands at $1.7 billion. The Bitcoin dominance indicator has remained close to the 69% level during most of the past 24 hours. The top 5 digital assets are mostly trading lower. The price of Bitcoin has continued to gravitate towards the $10,000 psychological level. Ether has stayed south of the $200 mark. XRP has been trending sideways at just slightly more than 26 cents. Bitcoin Cash stands at just less than $300, and finally Litecoin is the only top 5 asset trading in the green today, but it is up by less than 1%. The Coin 360 heat map shows a mostly red picture as the majority of the digital assets are trading lower today. Now, according to the token spread website, Bitcoin trades at a premium of more than 2% on the XMO exchange. The CEX marketplace has the biggest buy and sell side difference for the Bitcoin dollar pair. Let's now take a quick look at some of the characteristics of Zell. It is a mineable digital currency that is based on the technology of the privacy-oriented cryptocurrency Zcash. This privacy coin, in turn, was based on Bitcoin. Zell is also used as a transaction currency for all data processing on the Zell node's computational network. The price of this digital asset hit its all-time high of 24 cents in April this year. Currently, it has retreated to trade at just under 12 cents. We will now review the performance of the 5 cryptocurrency asset classes as grouped by the Messari website. The infrastructure group is virtually unchanged. There are both gains and declines on this table here. The media and entertainment category is the top decliner with a drop of close to 1.6%. This is despite the basic attention token gaining more than 8%. The financial sector stands slightly in the green. The 0x is the main bullish driver here. And the currency category posts a decline of just over 0.3%. There's, of course, red across the table here. And lastly, the services section is the top performer, but the gain measures at just slightly more than 0.5%. This is, of course, where the 5 major cryptocurrency categories stand so far this Thursday. We will now focus on the most significant moves among the top 100 cryptocurrencies. Then we will be back with our crypto experts after the short break, so make sure you don't go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
And we are back. We have Jason Fernandez, COO and co-founder of AE Token, and we have Kevin Merko, the CEO of Coin Metro Exchange. Guys, welcome to the program. How are you doing today?
Excellent. Thank you.
So, Jason, we will come to you first. The price of Bitcoin is near the $10,000 mark. This is where it also stood exactly 2 months ago. So, during these past 2 months, there has been some rises and some drops, but overall, the price has, of course, been gravitating towards this psychological level. So this is still 50% down from the all-time high of 20K. So would you say that this is a fair valuation?
So I think, obviously, Bitcoin is going through some price discovery. When you're looking at the charts in orders of months, we often see, an asset trades sideways for a while it figures out what its value is. The difference in this case has been that the geopolitical scene has been so volatile in and of itself that sort of Bitcoin has been struggling to find its value given all these multitude of things that are happening simultaneously. Brexit, the tumult in Hong Kong, the sort of trade war with China, all these things sort of happening simultaneously. So Bitcoin has sort of struggled to figure out where it stands and what its value is through all these, through essentially all this geopolitical upheaval. On the plus side, it does show us that there is a bottom for the most part on Bitcoin, and it's somewhere in the high 9,000s. I'd love to say it was in the $10,000 was a support level, but it seems that it's just under 10,000. It seems like it's sort of starts hovering around 9,900 and then sort of pops back up past 10,000. So I think, if anything, that still is a good sign overall. And I don't think that this means that this is an area where we're going to be stuck in forever. It's just a question of sort of all this, the rest of the scene sort of tapering down enough to where Bitcoin can figure out what its value is.
Okay, so overall, it's just a matter of what's going on geopolitically. It's kind of been increasing volatility when it comes to Bitcoin. So I guess quite difficult to find its true valuation there. So Kevin, welcome to the program. We'll come to you. What are your thoughts on this?
Well, similar to Jason, I think geopolitical fundamentals always are going to be drivers to market and to price. I think that as the market matures, we're starting to see more kind of correlation between geopolitical and fundamentals than we did previously, which is, I guess, good or bad depending on how you're trading. But in terms of market maturity, it's definitely a good thing. Jason mentioned buying interest right around 9,900. I would say that's pretty much 10,000. I mean, what happens with most traders, especially retail traders, is they initially, when they first start to trade, they trade around large numbers, 1,000, 2,000, 3,000, 4,000. Then they get smarter and think, oh, well, I better place my orders maybe, at 9,900 or 9,950. And they start going at like subsets of those large numbers because they see how the market moves around those large numbers and they want to get a better entry. So I think that basically what we have right now is that people are kind of accumulating around the 10,000 level. So as the market goes higher, we see profit taking. The market falls back down. There may be some fundamental news obviously involved in that ends up pushing the market lower. And then eventually accumulation happens again around 10,000, again around that large figure. I think that it's natural in any market. I would say that calling this let's say a good price or a good range. Definitely if you bought at 3,500 or 3,800 or 4,200, well, you're in a good position. If you bought at 19,000, sorry, you're definitely not in the same good position. But I think it does bode well for Bitcoin that we're starting to see higher lows. So over the past maybe week and a half, we started to see higher lows. Every time it falls a bit lower to accumulate more buyers. So that shows that there definitely is buying interest. And I think a lot of things, aside from geopolitical, we're talking about backed and these physically delivered Bitcoin contracts. The last time the futures market really lit up, it caused Bitcoin. It was one of the reasons Bitcoin crashed from its all-time highs, because people were able to short it without owning it. So we'll have to see what the effect is of physically delivered Bitcoin contracts. But definitely the news about that is also, I think, something that's weighing a bit on the market. I think initially that might weigh on the market more than it actually propels it higher.
But I just want to pick up on the point when you talk about seeing higher lows, because of course Jason also mentioned that, and I think that's absolutely right, because the market is volatile. We have seen it, hovering around that 9K mark, but it's gone down. It's gone from 14 down to 9K. So not bad, really, is it? It's not, as you know, we've seen a lot of people complaining, but like you said, higher lows there. Now, the SEC has been all over the crypto news outlets. Headlines during the recent days, they slapped ICOrating with a fine, but now they have actually registered Securitize as a transfer agent. So this platform offers issuing and managing digital securities on the blockchain. So Jason, we'll come back to you. Could you please explain what exactly this means?
So the ICOrating news really has not very much to do with the whole Securitize thing, but essentially what this news is about is that Securitize, which is sort of like a provider of technology for issuing blockchain tokens, they've managed to register as a transfer agent, which allows it to act as an official keeper of records about change of ownership for securities. Now, that may not make much sense, because the whole concept of blockchain is you're supposed to be able to track asset transfers just directly on the blockchain. But their view is that this is going to increase the amount of securities issued on the blockchain, and also sort of give comfort to people that this is a regulated space. Another point that they sort of make is that the SEC has also started approving other types of exempted securities, like regulation A+, and down the road, those people are going to need transfer agents as well. So that's sort of where their USB is, and they've spent a lot of time sort of focusing in on the SEC and teaching them how their whole system works. The actual submission only took 10 days, but they worked with the SEC for something like 6 months to make sure that the regulator understood exactly how their smart contracts would keep a record of those transactions. So it's interesting information. I'm not sure what a huge, if it will have a really huge impact or not, but I think it's interesting overall.
Okay, yeah, absolutely, definitely some interesting things there, especially in terms of providing the space, providing people with the comfort of regulation, as you said there. So, Kevin, what would you like to add here? What do you think this means?
So I'm going to toot my own horn here a little bit, just because I met the guys from Securitize in London. I think I'm going to say 2.5, 3 months ago, and I basically told them they needed to file for this registration in not so many words, mainly because of settlement. So without, the problem with most front-end platforms is or fintech in general, is that they're front-end only. They don't really look at infrastructure. And if you're using the infrastructure of legacy companies, you're not really challenging or changing anything. You're simply creating a nice GUI for someone to use. So I basically told them that they needed to look at what would be basically what underpins the financial market, which is settlement. And in the US, transfer agents can do some pieces of that settlement infrastructure layer. One of those, like Jason mentioned, or let's say probably the most relevant one here, is basically officially saying that securities have changed hands and showing what we call in Europe here DVP, delivery versus payment, meaning that there's a settlement of, let's say, one asset for another. Usually that would be cash for an underlying security. In Bitcoin world, it could be a stable coin, could be Bitcoin, whatever it is being used to actually buy that security, and then the name on the certificate, quote unquote, changes hands. So I think that it's a good move in the right direction. The big caveat here is it's a registration. The only way you get denied for this registration is if you have financial crimes in your background. So you could be an axe murderer and you would still get approved for this registration. So it's not something to really go out and make a big PR stunt about. I think the reason they did it is mainly because they're progressing forward, and two, most people don't know what it is. So they see the SEC in approval, and they start getting real happy because they think something's really going on in the crypto sphere. Not really. This was going to be approved when they submitted it, because I'm sure they made sure that everybody that's on their board of directors isn't a convicted financial crimes criminal. And that's why it got approved.
Okay, that's quite an interesting one there, that you can actually still be approved despite having that kind of background. But a move in the right direction. Kevin, I want to stick with you for the minute. I do want to stick with the SEC, because the SEC is already in battle with the Kik, and more recently the regulator hit Veritaseum. So the VERI token is down by approximately 50% since then, but the CEO, Reginald Middleton, has now responded with a 423-page document, which is he has a 423-page document with a response to this. So, Kevin, what is your take on this, and how do you actually weigh the chances of both sides on each of these on the case here?
So the size of your document doesn't necessarily mean that it's relevant or that it's a good document. Let's put it that way. So I've seen lots of long documents that are worthless. I would say this is probably going to be one of them. The problem with the SEC and them claiming something is a security is that, one, they automatically assume it's a security right out of the gate. But no matter what you're selling, even if what you're selling isn't classified as a security, and you sell it, or you do things in the process of selling it that equate it to a security, then by definition of the SEC, it's a security. And in both of these cases, both these defendants basically sold an investment. Whether the underlying asset or the underlying product was actually a security is meaningless. They sold it as a security, and while they were selling it or post-sale, they did particular, let's say, certain market manipulation tactics that also equate the underlying product to be a security. So I would say both of these cases, the SEC is going to win. Kik is a slam dunk. There is absolutely no way Kik gets through this without at least getting probably 80 to 90% of those charges stuck. When it comes to the second case, I would say it's very close to a slam dunk. The product itself isn't the biggest problem. It's how the product was sold, and once the product was sold, how it was sold, what was promised when it was being sold, and then how they're accused. Now, this doesn't mean this actually happened, but there's an accusation of market manipulation. And if the SEC makes that that charge, they probably have some evidence. Obviously, we don't know what that evidence is yet, but I would say that both of these are probably going to go in the SEC's direction.
Okay, so definitely it could be quite a slam dunk, as you put it, for the SEC there. So, Jason, do you agree? Do you think? Oh, looks like we've lost Jason. Okay, never mind. Unfortunately, we'll have to hopefully pick him up in a second. Hopefully, we can reconnect. But, Kevin, we will stick with you for the minute because we did see yesterday that the US Treasury actually announced sanctioning 3 Chinese drug kingpins and their Bitcoin and Litecoin addresses. So, how does a blacklist like this actually work, and can actually even be enforced?
So they put them on OFAC, right, which is basically, let's say, a list, for lack of a better expression, that is shared between pretty much every financial institution in the world. When you onboard clients, you basically run clients through one. This is one of the lists, the OFAC list. And on OFAC, you are going to see designations of individuals, whether that individual is designated, how they're designated, what the risk is, what they did, what they were convicted of, what they were accused of, any sometimes court documents, sometimes the information varies between individuals. So does the list work? Yeah, it works as much as any traditional kind of tactic that's used for anti-money laundering, which is to say that it could work much better, but that it does generally work, meaning that if this individual goes now to any company that is checking that list, that's the caveat here. If they're checking that list, they will see it and hopefully not onboard this individual. But again, like I say with a lot of things we talk about on the show, this is why regulation is needed. Whether you like regulation, you hate it, you think the SEC is a bunch of bullies, whatever you may think, there are very key reasons why regulation works and why it's needed. This is one of them. I don't necessarily want drug lords to be able to move money freely across the internet so they can continue, killing people all around the world. That's not something that I would like in a world I would live in, right? So that means that this needs to be adhered to. But even good actors don't do good things sometimes unless they're forced to. So without regulation that stipulates exactly how, let's say, crypto exchanges in this instance need to actually screen or onboard clients, then this list doesn't work. But with regulation behind it, it works. And companies like Parsec, like Chain Analysis, like Elliptic, companies that do know your transaction on the blockchain will implement these wallets inside of their automated checking services. This way, when a deposit comes into an exchange, even if the guy onboards with fake documents, that deposit will be linked to this wallet address, which is blacklisted. And then hopefully, again, that exchange or that financial intermediary won't allow that transaction to happen because it's been blacklisted by OFAC.
Okay, and I guess like you're right, you know, it really just shows why regulation that is so necessary. Jason, we have you back. Not sure what happened, but great to have you with us. We've slightly moved on. We're now talking about the US Treasury and their announcement. You know, they're now sanctioning 3 Chinese drug kingpins and their Bitcoin and Litecoin addresses. So Kevin has given us quite a nice broad overview of this, but of course you want your perspective. So firstly, how does a blacklist like this actually work, and can it be enforced?
So this is actually the second time that they've sort of sanctioned digital currency addresses specifically. The last time they did so was in November in 2018 when they sort of did it to 2 Iranian nationals that were added to the special designated nationals list. And I think the whole idea is to publish these digital currency addresses to identify sort of illicit actors operating in the digital currency space. I'm not sure how it's going to be enforced. I think regulated exchanges can automatically update a blacklist that sort of refuses to accept funds from certain wallets. But then those funds can sort of be transferred to another wallet in the interim. But what you would need is, you know, some of these firms that do like chain analysis that sort of does figures out, you know, where money is moving, et cetera, and sort of does that sort of intelligence before you can sort of figure out where those funds are moving. I think you would need that sort of cooperation in order to be able to get that to actually stick.
Okay, now Jason, I do want to just stick with you for the minute because you are based in India, and we spoke about India considering a crypto blanket ban earlier. So the Supreme Court has now given the central banks just 2 weeks to justify the crypto ban. So what does this mean, and do you expect their stance to change?
So this is interesting because the central bank, the RBI, has largely ignored the crypto community's pleas and questions on lifting the ban, or basically any questions on justification for that ban. They've basically not really responded to criticism from any quarter about the independent committee's findings. Many felt that the committee's findings lacked a basic understanding of cryptocurrencies, made several factual errors, several logical and fallacy errors. And one thing I found particularly unbelievable was that they had a line where they said virtual currency in and of itself does not have any of the benefits associated with fiat currency, which to anybody who's obviously looked at this, even with really basically sees that cryptocurrencies have several benefits, you know, over traditional fiat currency. Not least being the fact that it can't really be counterfeited that easily, or at all, perhaps. What's different now is that the Supreme Court of India has given the central bank essentially a directive to respond within 2 weeks and actually respond and actually have an answer as to why they've banned it and whether they would reconsider it. So this is sort of the first time where they've actually been pulled up and actually asked to explain themselves. I'm still not overall hopeful that this will actually change anything and that the RBI is going to come back and say, hey, we changed our mind. I think we're going to, you know, let that slide for now. I doubt that would happen, but I do think that there is space for people in the cryptocurrency space, particularly in India, to argue for just standard FATF guidelines. You know, I mean, these have been implemented all around the world. There's no reason why they can't use the FATF guidelines as sort of a framework to figure out, you know, cryptocurrency regulations in India.
Okay, well, Jason, we'll definitely have to check back in with you and see how this story develops, because quite an interesting one. Like you said, you know, this is the first time they've actually been asked to explain themselves, so we'll definitely have to keep our eyes on this. Now, just finally, Kevin, we will come to you. A German engineering company has developed an application that lets users book parking spaces. There are already apps like this one out there. There's plenty. But what is unique about this app? And is it that it used IOTA technology? So it's quite interesting. Is this one of the examples where you see DLT tech adoption gaining more traction in the future?
I guess the first thing, yes, I guess it means that adoption is gaining traction with some specific industries. That's for sure. What I would say is that I think we do a disservice to crypto in general when we grasp at straws to try and get like headlines in the news, right? I've never heard a company do a PR release that says, we're switching from Oracle to Microsoft SQL database servers, and that means that, we're moving forward and we're really a top-notch entity. It's the changing of tech. To be honest, who cares for the most part, right? I don't think it's really going to progress the industry forward. Right now, when you talk about crypto in general, the real thing you're talking about, unfortunately, and maybe fortunately, at least the first thing that gets talked about is speculative trading. That's what crypto's about right now. It's about trading. Whether you think it's speculative or you actually, have some other reason, whether you're hedging, I don't know what you'd be hedging, but that's really the main use case of crypto in general right now is speculative trading. That's where most of the volume comes from. After that, you're probably talking about payments, and after that, we get down into different industries that are using the underlying technology, the protocols, like this company here for their parking app. But in reality, like I said, we seem to be grasping at straws. Like, we're doing a bit of a disservice to make some of these mundane announcements, I think, sound like they're actually spectacular. So they built a company on a database. Great. So as everybody else that's on the internet, everybody has a database. Everybody uses a different one. Doesn't necessarily mean the company's innovative or not. So I think that I think yes, adoption is growing, and that's great. But I think we also need to kind of filter when at least companies themselves even need to filter, like, just because you're using blockchain doesn't really make you innovative. It's what you're doing. And, a parking app is not innovative. Now, if they found a way to, I don't know, find parking spaces in your car parked all by itself on blockchain, that would be cool. And we could probably talk about that for more than a few minutes.
But I definitely think that's interesting because, it just shows how far technology has come to turn around and say, well, actually, just to say you're using blockchain technology, that's not impressive. And I think even that sentence in and of itself is impressive. But just finally, Jason, your thoughts for us?
Yeah, I agree with Kevin overall. It's fairly basic. They really haven't distinguished themselves or proved whether they've done anything innovative in and of itself. The interesting thing that I find is the fact that they're using IOTA. And IOTA has sort of been sort of hyped as the car vehicle type cryptocurrency. So, for example, like Jaguar and Land Rover had introduced a system where they're going to be paying their drivers in IOTA for essentially following road rules and doing certain things. And I think ultimately what's going to end up happening is IOTA is going to be used more and more for things having to do with vehicles, because you could see why it would be useful to have a cryptocurrency that you're earning for driving well, and then being able to spend that cryptocurrency parking, or maybe you're earning cryptocurrency for providing automated data for automated cars. So, for example, the data on road and traffic conditions can be uploaded to a server, and you can be paid. Drivers can be paid for that. And I think what's interesting is IOTA is sort of distinguishing itself or as sort of the go-to cryptocurrency for vehicles and that sort of use case.
Guys, as always, it's been an absolute pleasure having you both on the program today. Thank you so much.
Thanks, Leah.
Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has stood just slightly above the $260 billion mark, as no significant moves have taken place. Trading activity is virtually unchanged, as the CoinMarketCap website's daily trading volume measures at slightly less than $60 billion. Bitcoin continues trading sideways close to that $10,000 mark. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin Mirko and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.